All right, welcome back to Two Stupid Guys Trade Stocks. I'm Vinny,
I'm Dylan.
and today Dylan's going to walk us through some of his swing trading rules and basics.
Yes, so this video may not be the most fun, but it is the most important. So I'm going to release weekly picks on stocks that could, you can trade for that week or even hold for a little bit. However, if you watch those videos and you're like, hey, Dylan recommended this and then he didn't take it, it's because it did not satisfy one of the conditions in this video. There's like 5 very specific rules, and it's going to make the swing picks video a lot quicker. So
Yeah,
you got to watch this first.
These are just to kind of keep you from stepping on those landmines,
Yeah. Specifically, I chose plug last week and it did not satisfy these conditions. So I didn't take it. And if someone took it, you're bad. I don't.
Gotta follow the rules, right?
All right. So rules to follow for each trade, and then just a quick guide on how to read my charts because everyone is different. So all right, here's the fun little disclaimer. We're not smart. We're not brokers or dealers or whatever. So read that. So here's just some quick definitions. Okay. So swing trading is essentially it's just capturing gains in a stock in a couple days to several weeks time frame. The entry is the most important part. Long-term trading, entry doesn't really matter because you're going to be in it for years. So when I say a buy zone, it's just like a dollar level or range of which I believe a stock is a buy. Sell zone is where I believe that the stock should be sold for profits, not for a loss. That's a stop loss. The stop loss is essentially a unique order where if a stock hits a certain price, your broker will sell all your shares, thus limiting your potential for unlimited, loss. Taking partials, I highly recommend this. I have gotten screwed by this in the past. Good instance is I bought plug at 30 and I sold everything at 45 because I'm like, there's no way this is going higher. I went to 75 literally within a week. So you sell a little bit, you sell like 10, 20% of your stake, and then you just move your stop loss to a little bit higher that you're comfortable with. Not to break even, you can go higher than that. That way you can just make sure that you're locking in profits. And then we have a previous video on how to get started in investing for beginners if any of this is confusing. So, all right, let's get started with the fun stuff. So rule 1, you never buy when the market or the SPY. Vinny, what's the SPY?
It's the index of S&P 500. It's actually ETF.
What's the S&P 500?
500 biggest companies in the United States by market cap.
Boom. All right. So, by market cap? I actually didn't know that.
Yeah.
So when the SPY is tanking, all the technical levels that I give you don't matter. It's the SPY is tanking and that controls everything. If the Dow and the SPY, everything's losing 30%, i.e. this thing, it's every level doesn't matter. It's dead, right? So if a stock is approaching a buy zone, meaning it's going down, but the entire market's tanking because of a negative, powerful catalyst like COVID, just stay out. It's not worth it.
Yeah. So it reminds me of like the scene in one of those movies where like before the tsunami comes, all of a sudden all the fish are like flopping around on the bottom of the ocean. Yeah, don't go for those fish.
That's true. Yeah, that's or like when the animals, everyone like left, all the animals walked up the hill. Yeah. Don't charge towards the ocean. It's not a good time. So if this is confusing, I will explain further. Just like DM us or message us. But basically, if the stock is approaching a buy point due to the stock dropping on heavy volume, meaning more than average volume, then you watch and you wait. This is what happened to plug. Okay. It may blow past your support levels. This often happens when the SPY is having a correction day. So once again, don't buy on the SPY is tanking. The charts on the next page may be overwhelming. I'm going to explain everything at the end. But if you don't have access to charts, then you use your brokerage app because not everyone can look at is this abnormal volume, right? So on Robinhood, which is like a simple one, plug 35 million. The average volume is 23 million. So they're more than 50% higher in volume than they usually are, and the stock is dropping. That means you watch and you wait. You do not buy it. So here's the daily chart. Basically here, all the way down, we have above average volume and it's tanking. Okay. So you do not buy there. That is not a good time to buy. You watch and you wait. Here, it set a new low. You never kind of buy. You don't want to catch a falling knife. That's explained as well. So once again, this is still not a buy. You're still waiting. And then here happens. Boom. Again, higher volume than average. You're still not in the stock. Now that this happened, this is actually a decent buy because it's showing that there's resilience. It also showed that it bounced off the 50-day moving average. So plug would actually be a decent buy. Now, it was not a good buy up here. Okay. Here's what happened on the 60-minute chart. No one is expected to know this. But basically, look at this staircase thing and look at that giant, scary red bar. That means stay away. Okay, it went from 60 to 54 in an hour. Like, that is not a good call. We want to be able to do picks where you don't have to be watching the stock, right? You want to be able to look at what you're doing, know your buy points, go to work, maybe check once or twice and set in your stuff. So you're not expected to know this. This is an hourly chart. However, had you been watching the day before, you know that this is not a good buy. So here's the don't catch a falling knife. You never want to enter a stock on a down staircase step pattern. What does that mean, right? So you want to be aware of at least 3 days of consecutive red where the volume is increasing. That means that it's loading up for a big move. If everyone is watching PLTR this week, now, one, I hate when people on YouTube do this. I hate this because they're like, oh, look, it's going down. And then you're just going to buy at the bottom. And then you buy it, it comes up. No one knows where the bottom is or the top. If you're listening to those people and they're making it look like it's this easy, don't ever watch that YouTube channel again. They're lying to you. Here's just a good example of increasing volume. Okay, so look at the stair step pattern. And we're also setting lower lows every day. That means don't touch it. Okay, this is bad. So here's what ended up happening. Stair step, super bad. It dropped another, it's cut up another $4. It went down to 25. So you see this rising up. This means it's rising up for a big move. And then it ended up actually happening. Often this will happen around earnings. So beware. All right. You never want to risk too much money on any trade. This is what Vinny lives by, right, Vinny?
Yeah, I was curious. Like, I'm sure you're going to kind of tell us a little bit here, but what portion of your portfolio you consider your risk size or tolerance, basically, on any individual trade?
So I change by the month on that, but it really depends on the stock. So the weekly picks are by like low, medium, and high risk. I'm not throwing 10 grand on a high risk. And when I say I'm not going to do that, I mean there's a 50% chance that I won't do that, right? So it depends on how beautiful a graph is and how everything's looking. But if it's a relatively safer stock, for instance, if I'm doing a swing on Apple, I'll take a bigger size because if Apple tanks a bit, I don't know, but I have a better chance of I can just hold the stock and it'll eventually go back up, right? If it's a stock I have no faith in, like CLSK last week, I'm not.
Bitcoin miner.
Yeah, I'm not going to put a lot of money on it. I'm just going to watch it.
Yeah.
So if you're new, please do small share size and you concentrate on percentage gain, not dollar gain. So let's say you buy 10 shares of a $10 stock. Stock increases $1, you sell, you made $10. If you tell that to people and they're mean, they'll be like, dude, you made $10. Who cares? But in reality, you made 10%. And if you add 100 grand in your account, you just made 10K, right?
Yeah.
That 10% for the year is amazing. And you did that in one trade.
Even more than that too, you by every trade you execute, every stock you watch where you have money in the game, you are learning at a different level than you would by being a casual observer. Yeah. You may have earned $10 or 10%, which is respectable, but you have increased your knowledge about how like stocks can move in a swing dramatically.
Dramatically, that's accurate. So just percent, and if anyone makes you feel bad, like someone posted what's Warren Buffett's guy, Charles
Munger.
Yeah. On
Oh,
how long it took for him to get 100 grand.
Yeah.
And then the comments are like, took him way too long, man. Like, who is this guy? I'm like, he's got like $90 billion. So
yeah. One of the richest men in the world.
I know, like people are ridiculous. So you don't want to add stress by risking too much. Okay. So you want to be like this. Nice and suave. Vinny hasn't seen this presentation.
No, I have not.
You don't want to be like this. This was me this week.
Yeah.
Because I took some very risky trades. It looks like it actually might pay off. But I was real stressed.
Yeah.
At one point, I had lost 10% of my entire account in one day.
Yeah.
And the next day, I made it all back. But still. Jeez. You do not want to trade with emotion. Don't get attached to your stocks and let them drop below a stop loss. There's always more stocks. There's like a million of them.
One of the important points too is that in order for you to be able to profit from the ideas that are successful, you need to survive the ideas that are not. And persistent
that's a good point.
Is very important to making sure that you survive to continue like trade another day.
Yeah, that's actually a really good point. Let's say you're right 85% of the time, you go big every time. The 15% time that you're wrong, you just lost your entire account.
Yeah.
Refer back to my HMNY trade on our account review on our very first video.
I looked the other day. You could buy the entire company now for like $8 million.
I know. Yeah. It was a great company.
Yeah.
So, geez. Yeah, actually, my graph's a really good lesson on that. I should have done that. So you want to beware of wash sales if you sell for a loss. What this is if you sell a stock for a loss, you got to wait at least 30 days before buying the same stock. It's called a wash sale, and basically you cannot claim the loss in your taxes if you end up buying it within the 30 days. It's like a whole thing. You have to let another 30 days expire. It's a little bit of a nightmare. So try not to do that. I did that my first 2 years of trading too because I didn't know anything.
If you're like me, you just trade in a retirement account and you don't have to worry about that because it's all taxed anyway.
True. Yeah, that's a good point if you're doing a retirement account. I'm not. 2 exceptions. This is completely your call. If the market's going up or sideways, but the entire sector of your stock is down, then you can make a judgment call on if you want to get rid of your stop loss. That's on you. I do that sometimes. If you're long term, a stop loss doesn't really matter at all. So you want to be resilient. You're going to have losses. You're going to have times where a stock hits your stop loss to the penny and then it goes back up. It's inevitable. It happens to me like once a month. All that matters is the risk to reward ratio. So if you risk 100 and you gain 300 and you're right 66% of the time, you're going to make a lot of money. So that's what I've been doing. So that's basically all the rules. So don't go against the SPY. Don't go against heavy down volume or the staircase pattern on down volume. Very, very important. And don't oversize. For my charts, just real quick, the difference between an SMA and an EMA. These are very popular on charts. So a small moving average, it calculates the average closing price by the number of periods in that range. So 50-day, 100 and 200 are very popular. Exponential, the calculation is much more complex. So I did not post it. It's like straight up calculus. But basically it weighs the more recent days. So if you have a 20 EMA, it's 20 days of calculation. It weighs the most recent more than the last days. So it moves up and down with the stock more closely than a moving average. Mm-hmm. So here's my chart. These are direct from my chart. So I had to find stocks where they were not touching anything else. But I use a 9 and a 20. And I just started experimenting with a 50. So these will follow the stock more closely. This less so because it's a longer time frame. Mm-hmm. These are really good resistance or supports. So this is the 50. This is 100. This is a 200. All you need to know is that on my charts, the pink, the closer dash to mid dash to solid line is 920, 50. And then this is 50, 100, 200, just the different dashes. You want to take me out real quick. And I will get to here. I'm going to share my actual graph.
You find that you use one for like, what, like the EMA versus SMA. You say SMA tends to be more like
It's
support.
really good for resistance and support.
Okay.
Yeah, it's really good for resistance or support.
When do you find yourself using EMA?
So you can use EMA actually. So I have it up. I'll show you. So make this bigger. Okay, so this is Riot. This is a kind of a terrifying stock, but basically your 9 follows very closely, real close to movements of the stock. Sometimes when these cross each other, that means that a downtrend is starting. That is not always accurate. That can be wrong all the time. So be real careful on that. I'll pull up another stock that shows that. Just to make this easier, these lines, so there's 3 red and 3 green. Those are kind of like mini resistances and supports. When you watch a stock throughout the day, it'll hit these lines and hesitate, and sometimes it bounces. So the medium dash is the high for yesterday. The super fast dash is the low for yesterday, and then this is the closing price. This solid red, this is the most important. And then for the day before, it's the same thing but green. So this was the high 2 days ago, this was the low 2 days ago, and this is the closing price. Those are really good resistances and supports. So here we go, 9, 20, 50, and then the simple moving average is 50, 100, 200. This is VWAP. We won't talk about this here. Don't worry about the yellow line. It's way more confusing.
So this would be pretty extended, basically, from the support at this
exactly.
Point. Okay.
Thank you for saying that word. So extended. That means that basically it is real high off these EMAs, and we would expect it to come down at least touch this and be fairly close. This nightmare for some of you on the side of this graph is called volume by price. This is the volume at the specific price levels, right? So it does not have that much volume at here. It has a lot of volume down here at like $9. So here, let me go to like NUS. Okay, so this is a great example of the 200 small moving average being a great support. So this is NUS. It's going up. It kind of goes in between these. Sometimes in between this can be a buy zone. So had you bought here, you could sell at the previous high, which would have been here. Again, in between this would have been a buy zone. Sell at the previous high if you really on top of it. This tanks, okay? And then we hit the 200 moving average, and it bounced 1, 2, 3, 4 times. So this is a very strong support. And now we're on falling volume. Let me go to... Sometimes all these lines can get real confusing. Here's Apple. So if you're looking at my charts and these are all close together, just ignore it. Sometimes it's too much. But as you can see, it kind of goes around these 9s and 20s a lot. Give me a stock that you like, Vinny.
About the whole logic.
A logic. I'll do that one next.
Yeah.
So this is plug. It's bouncing off of the 50-day, and it's also went past this 50 EMA. So you got to be careful there. But that's basically how I do. Oh, what is it? HOLX.
Look up AMD actually.
AMD. Okay, so yeah. AMD is a nightmare.
Oh, okay. So they had a recent bounce. I thought that's why I was just thinking that
they do. The AMD, as you watch these stocks, which is why you can take advantage of me and Vinny for swing trading. AMD respects the 100-day really well, right? So it just hit this 100-day again. So I would expect AMD to start shooting up, and I would sell it at about 95 and sell more at 100. I would try to buy as close to this as possible.
Yeah.
It does not respect these EMAs in any way whatsoever. So the EMAs are trash on this. So
yeah, it's very funny. These are like kind of things you can only really perceive after you've been in the market for a certain period of time.
Yeah. And when you've bought on these EMAs and you're like, oh, well, that didn't work.
Yeah. Exactly.
So, but I mean, even looking at a past stock performance, it's crossing these. Like at least the 9 and the 20 are useless. It crossed this 3 times in the span of 2 weeks. It does not respect the EMAs. So
yeah.
All right, we can. I'm going to stop sharing this guy. And start sharing. Yeah, we're pretty much done, but this way you can see the cool little, my favorite photo of you.
Oh boy.
All right, I'm ready. Yeah, there you go. All right, the end. So I hope that explains stuff. Vinny, was that confusing?
No, I thought it was a good overview. You know, kind of pitfalls to stay away from, and kind of like what those kind of simple averages and things like that you use and how you interpret them.
So now when we do my stock picks,
Exactly.
if it works, hit the buy zone, and then I'm like, hey, I didn't take it, and the 7 people who watch are like, why not? I'm gonna say, watch this video. That's why.
Exactly. Yeah, this video will be linked in all of our future weekly swing trade picks, so that way you have a good basis, because you really shouldn't be listening to the pick if you haven't done the background as far as like understanding how Dylan's methodology works.
Yeah, exactly.
Right. Well, thank you. Join us for the next one. Dylan's going to give us some picks in the next video.
All right, have a good one, guys.